Welcome to the Broken Pie Chart Podcast, episode 381. I'm your host, Derek Moore. Back on the program, Mike Snyder. He's off assignment. Shane Skinner's on assignment this week. You actually were never on assignment. It was just, you were doing some other stuff for a couple weeks.
I was not on assignment, but happy to be back. Good to be back. Missed everyone. Shane and I flipped now. He's off.
He's on assignment. Do you have a report? Do you have, like usually when you're on assignment, you come back and report something? Nothing to report?
All I got is little sleep and the weather's changed. So,
okay. All right. I think people who know what that means. All right. We got to talk about SpaceX. So I was laughing today, Mike, and I think you saw the same thing on our charting program. SPCX is the SpaceX ticker. And, you know, you pull it up and you're like, it looks like it gapped up today. And I looked it up. And so SpaceX paid Tuttle Capital Management, according to an internet search, to acquire and relinquish the symbol ahead of the rocket maker's highly anticipated NASDAQ debut. It was previously used by a SPAC and new issue ETF. So sounds like Tuttle got paid to give Elon the symbol. But the charting programs are all screwed up because it looks like you had this massive gap up today. You think they would have fixed that?
I know. For the biggest IPO of all time, I was pulling it up, waiting for it to start trading. I was like, how has this been trading since June of last year? So now it all makes sense. It was owned by a SPAC. And maybe the whole point of the SPAC was to sell the ticker to SpaceX.
Oh, you're saying let's do a SPAC. Who even cares what it is?
Just invest in the ticker symbol.
Yeah, now you own the ticker, and now Elon's got to come to you and give you a payment to do it.
They need it. What else could it be?
I don't know. No, I guess SP. No, you kind of need 4 letters. Okay. Well, as you can hear, I'm playing a little hurt today. It's like the Michael Jordan flu game. So I'm a little under the weather. And I told you off air, Mike, it's very similar. The pressure of doing this podcast is, I think, what he faced in Game 7 of the NBA Finals that year.
I'll do my best, Pippen, and carry you off the court if needed.
That's right. That's exactly right. Well, they're kind of doing a victory lap, at least for if you look at volume on SpaceX. So SpaceX today priced at 135. We saw that early this morning. I think it was pretty cool because people got to see and are reminded what it's like when a big issue comes out. You get, shares hit accounts, I think it was a little after 9:30 Eastern. Towards 10 o'clock, you start to get the indicative prices of where they think it's going to actually start trading live at. So people got the IPO shares, they got at that price. Stock can open higher or lower. But 500, this is still updating. 516 million plus shares traded today. The amount of shares that went public was 555 million and change. So I think you and I both agree that is not part of the volume. So that means almost, in theory, they traded the whole float today. And that's pretty cool. No options even yet, right? I think you said next week maybe?
No options yet. I heard that possibly Tuesday they will come out, and I can't wait to see how those are priced.
So the implied volatility on SpaceX, like that's really what I'm thinking about. And if I look at PLTR, which is Palantir, and there's a reason why I'm using Palantir because there's a price to the sales component there. And I look at, I don't know, what's a fair comparison? Maybe a 30-day option. So what does that put us at? That puts us, let's look at the regular Julys. So July 17th, that's close enough. That's about 34, 35 days. So the at the money strike, or the around the money strike, let's say the 125, 130, I have the implied volatility at just under 50%. And so that's implying you take 50 divided by 15.875, which is the square root of 252, the number of trading days in the year. And that implies like a 3.15%, one standard deviation expected move. Is SpaceX options, when it comes out, is the implied volatility higher or lower? And if so, how much to Palantir?
I think it's going to be higher. I think a decent amount higher, actually. So I'm pricing the at the money straddle, and it's implying like a 12%, trading range
On Palantir.
on Palantir. If you buy it, that means you need the stock to go either up 12% or down 12% to break even on that trade. I kind of think SpaceX could be 15-20%.
So that puts it like a 75 vol then, if I'm doing the math in my head.
Yeah. I know it's a lot, but like the stock moved what today? Well, I know it's the first day, but
it basically 160. It started trading around 165-ish.
Right, but the IPO price was 135, right?
That's fair, but yeah, okay. Back, if they did this, if they didn't set the price, they might have priced the IPO at 165 today.
Sure. All right. Well, even if you look at the trading range, so it hit a high of 176 and a low of 150. That's a pretty big range. And I don't, generally after the IPO, over time, you would expect volatility to come down, but that doesn't mean tomorrow it's going to come down. So yeah, I think it's going to be higher.
Okay, so let's look at Micron. So Micron's implied volatility, the around the money, is 107. So is it higher or lower than Micron? A 107. I'm looking at the July 17th. I'm just for hypotheticals. I'm looking at what did I say? Like the 980 call. Give you a sense of how much premium there is and how much extrinsic value, volatility premium is in there. There's something called the standstill return. Like if you bought, and this is a little bit in the money, but I'll give you an example here. The 990 is basically 0.85% above the current price of Micron. The standstill return, meaning if you sold a covered call on that, it's 150%, 151% annualized. So assuming you do it for 35 days and you do it again and again and again. Like that's pretty rich premium. Above or below Micron?
I think Micron's a good number. I think it's right around here.
Okay. That's fair.
What do you think?
No, I wouldn't be surprised, because if I'm a market maker and I've got to hedge this, I want to be compensated for, having to go out and hedge this. So no, I think you're probably right. I think it's an unknown. Like you'll have a few days in of price history. So you've got to price that into, maybe it's 115.
Yeah. Also pretty quick for options to be traded.
What's the normal course of action there? Do you remember?
I feel like it's usually a couple weeks.
I think you're right. I'm trying to remember the last really big issue that came out.
I kind of remember Meta. Meta was, that was a while ago now, but that was a really big one. And I think it was 2 weeks before options were listed on that.
So SpaceX, the market cap today closes at about 2.1 trillion. They valued the IPO price, valued it at 1.77 trillion. I think this makes Elon Musk the world's first trillionaire.
Yes.
I think he edged over that. The shares outstanding is 7.3 billion shares, if I'm right, because that's in millions. 555 million is the float. So they only issued a small amount of the shares. And we talked about this last week where we said the NASDAQ, I think, is going to weight the free float, but they're going to do a multiple, I think 2 or 3 times. And there are some other indexes that will they'll weight the multiple. They're not even going to do they'll weight it, the free float. So if at some point this went into the S&P 500, and I don't think I've heard that it is. I believe, they have a committee and they do all that stuff. But I think I saw Nick Majuli put out an article today. Like if this was in the total stock market index, it would be 0.11% weighting. Total stock market is everything, like all over the globe. Because they they only adjust the float. So I think if my math is right, and I think Nick had this in the piece too on his blog, it's about a 0.6 to 0.7 weighting in the NASDAQ 100 once it goes in, if it's like it is today. So
I saw the same. Yeah, huge company, but the available shares is a small portion of it. So the immediate impact that it's going to have on the NASDAQ, we'll have to see. Over time, that could obviously grow, though, as more shares become available in the coming months.
We also have spoken about the lockup periods. There's some that's 6 months, I think. Others, when the earnings come out, there's certain benchmarks. You can Google that and read through that. But that's the other thought, that you will have people who have put into a private investment and had their money tied up for years. In theory, they might be able to get liquidity. I think Elon's shares are locked up for longer, but there's certain benchmarks. Mike, the other thing we're seeing is Eric Baltunis from Bloomberg tweeted out today, there are 25 different ETFs that are coming out, everything from 2x leverage to option income to covered calls, enhanced income, auto callables, yield boost, target income, and just your standard leverage stuff. 25 different products. So think about this. I believe these are all filed. I don't know which ones are going live. I think he said some of these. Maybe the audience can't see this, but the Bloomberg inception date, maybe it's next week they're going to go public. So like this, think about once options come out and then you have all these ETFs and they're all going to be doing single stock type stuff, some of these leveraged on SpaceX shares. So that has to do something for the supply and demand of this too. Like, this is going to be interesting.
Yeah, I mean, the marketing is in full swing behind SpaceX. I mean, I can't remember, I was walking down the street a couple of days ago and I just overheard a group of, some older neighbors talking about SpaceX. And I can't remember the last time where I just overheard a conversation about an IPO. There's that much hype around it. And these ETFs are going to take advantage of it because the demand is there. Now, how it affects the market, does it make it SpaceX more volatile because there's so many of these leverage products and options products available, or does it make it less volatile because there's so much more liquidity?
Yeah, I mean, I have to think too, some of the funds selling premium potentially could dampen volatility. And this gets into when you look at a market maker's book and you look at the aggregate, their delta exposure and where they need to hedge. Sometimes flows coming in sort of self-hedge. They work out the book in different ways. But I mean, according to Bloomberg chart, if you look at single stock ETFs balloon to beyond 50 billion. So that's AUM and single stock. This chart really was very low in 21, 22. It starts to accelerate and it hit a new all-time high today. So there's demand for these. Like, they wouldn't launch these products if there wasn't demand. And you look at some of the leverage stuff, they get a lot of assets in there. So there's a reason they do it. This will be interesting, though. I want to see that. And I want to see what happens when the options market comes out. I can't wait. I'm interested.
Me too.
It'll be cool.
Yeah.
All right. A lot of people, there were like pros and cons to, or I'll say supporters and detractors talking about SpaceX today. Some of the analyst firms came out. Some brought price targets out that were higher than the current price. I think I saw one where on CNBC, they said, I think their price target was 110, from memory. I don't know that for sure. So it's all over the board. And one of the arguments against SpaceX is they're doing a price to sales multiple. So Palantir is trading at 63 times sales. SpaceX, I think this is from Charlie Bolello on Twitter, 119 times sales. And the S&P, for perspective, is trading at 3.5 times sales. And there are some people who attack that and say that's crazy. It's trading too high, and the long run is more like 1.5 to 2. Anyway, set that aside for now. I mean, you're not buying this because of their revenue today and their earnings today. You're buying this because You believe that index inclusion is going to help. You believe that demand's going to be there, and you believe the TAM, the total addressable market, is big enough that this is going to work. So, how many shares can I put you down for, Mike, in the aftermarket? Can I put you down for any?
That's what I keep hearing all day is the price to sales. And when you compare it to other huge companies that have already sort of grown into their valuations, it seems crazy. But the total addressable market is also a huge number. And so, the potential for them to grow into this number is there. Now there's a lot of risk at this point, right?
Yeah.
With that type of valuation.
Professor Aswath Damodaran from NYU, he's a value, called the valuation guru or the valuation king. He put a valuation at 1.2 trillion. He did mention when you say the TAM, the total addressable market, is something like 20 trillion. He's like, that doesn't even make sense. Like, you could have at least put a couple trillion and that would have been believable. So he wasn't buying that. But if you're against this stock, and I didn't do it prior to this broadcast, but I will tell you, like, you go back and look at price to sales, price to earnings of the Amazons, the Googles, the Apples, all these companies, the Nvidias, like 10 years ago. And then you said, what was it trading its, 10-year price to earnings, meaning the eventual earnings you had in year 10 versus what it was trading at. And a lot of these were trading at under 1 times 10-year forward earnings, meaning they grew into their multiple. So who's to say who's right and who's wrong on this? I would just say it's going to be volatile. Like, it's going to be a bumpy ride if you own these or you're thinking about owning these.
Yeah, only time will tell. I mean, just remember, if you own the NASDAQ, you're going to have a piece of this. So
that's a good point.
Do you need to own something that's double leveraged? And, maybe you want to, but there's a ton of risk there.
I mean, no doubt. I mean, you have a volatile stock as it is if you're using leverage. And if you're using leverage in any sort of size, like you're really taking. But I'm glad you made that point, Mike, because it's one of the things you and I always talk about. Like, if you own the index and SpaceX grows, you'll own more of it because it's a market, it's a free float market cap weighted index. And although they made some adjustments to how they do the float, like, you already own it. So if it grows, like, you owned NVIDIA if you own the Qs and the S&P, but specifically the Qs, like, you owned it. And as NVIDIA grew, you owned more and more of it. And it kind of helped the Qs, lift up a little bit. So yeah, you can own the Qs, and at least then you have a little more diversification. Like, I don't know what's going to happen with this, but, we'll see. All right. Anything else to add to that, Mike?
No.
All right. Short and sweet. I like it. So, is the European Union out of step, by the way? Did you see the European Central Bank decided to raise interest rates? They raised, let me just get the right amount here, by 25 basis points. I think they're the first developed country to raise rates. I disagree with this. And I'll tell you why. Because the inflation that's in there, a lot of it is housing. And it's the same argument like people are making here, that they say, well, the Fed might raise interest rates. I don't think they're going to raise because Warsh did not get this job to raise. So, by the way, Mike, you have a lot of feedback in the background there. It sounds like you have a fan on you, maybe.
Right now?
Yeah.
Okay.
But I still want to get your commentary. So is the Europe, like, are they out of step here? Like, why would they do this? They claim inflation's the problem in Iran and everything.
Well, yeah, I mean, they claim inflation's the issue and growth is strong. And so, there's comparisons here in the US as well that we may raise for the same reasons. And I agree with you. I don't think they're going to raise. I don't necessarily think they're going to cut in the near future, even though you may disagree with that. And I think you do disagree that they could cut and it would be fine. I think you've said that before. Mm-hmm. I just don't think they will, given the inflation numbers. I don't think they needed to raise when it comes to inflation and growth. I don't think that raising rates at this point is really going to do much to that inflation.
I think this could be an unforced error by central banks. And, I've critiqued the central banks like everybody else has. I never put it on, never kept track of what I said on central banks. I'm very clear, I think, during the 2021 period, them raising rates did nothing to lower inflation. Here's one of the things. If you look at core CPI, which was 2.851 year over year, and then you look at the components, and if I'm looking at, something like core services, which shelter is in there, shelter was 1.496 and core services was 2.595. So this is where you got to be careful. You can't just keep taking stuff out because you don't like it. But I'm going to do it here because if you take out shelter, and core CPI is really not much. I mean, it's just not. And
so I have a question for you. Why take out shelter?
Because I want to make I'm making an argument here.
Okay.
Now the reason, but seriously, the reason to take out shelter is there have been papers released by different Federal Reserve banks. And one of the things that some of the literature says, I'll sound academic for a second, is that raising rates actually raises shelter cost. And they showed some data. I said last time I would search for the paper and I never did. So maybe I'll do it for next week, or I'll do it if I can, and I'll put it in the show notes. But the point is, like, you raise rates or you keep rates higher. What happens? Well, your capital cost, let's say you're buying a building or you're financing a building and you got to charge rent. Well, your costs go up, so you have to pass that through. If you're owning a home, you're going to pay more in mortgage cost. Everything just sort of costs more as a derivative of that. I don't disagree. Like, they needed to cool off housing. I think they've cooled it off. There's not much movement. So that's my point, Mike. What do you think?
No, it makes sense. It does seem like housing has cooled off, and it makes sense why like a rent would go up if interest rates move higher because of all the input costs that are involved. And also, when you think about buying a home, interest rates are higher. Do you expect that the actual price of the home you're buying is going to drop enough to the point where it's going to offset the additional costs you're paying in higher rates? Probably not. At least not right now. That's not what we've seen. So it does make sense that it actually increase your costs.
I mean, the way they do it too, it's rent of primary residence. So that's like owner's equivalent rent. Here's owner's equivalent rent of primary residence, and lodging away from home. And owner's equivalent rent is basically where, I'm totally simplifying this, they knock on the door, the survey people, and they say, if you're going to rent your place out, what would you rent it for? And a lot of times it's based upon your operating costs of your home, like how much your monthly bills are. I'm totally oversimplifying that. But that's kind of like, if they need an off-ramp where Warsh has to sell this, I think they can look at rent of shelter. And honestly, rent of shelter, the way that it's calculated, it's lagging. So, I mean, I didn't do it before the show here, but if you pulled up like Zillow and you saw what their rents were, like that's real-time data that tells you that. So the other, I guess, thing to talk about is oil. And I don't know if you looked at the futures curve. I know you look at that from time to time. July contract closed around 84.37 a barrel. The November of 27 now is 71.95. So let's look at December. Basically, the December contract is saying 77.16. The way this works is, if I wanted to, let's say I needed to buy barrels of oil. So I buy this contract and then I take physical delivery of the oil, or I could buy the December contract and then in December I take physical delivery. Flip it around. If I'm a seller of oil, I can say, well, I can deliver a contract at 84.37, or I could, maybe the oil's not ready yet, but I know I'm going to have it, or I want to sell it in December. This curve is inverted right now. Often the nearer term rates for oil and other commodities are lower in the near term. So, Mike, I mean, this was telling us for a while that oil was coming down. I mean, are we at the point where oil stops to matter?
It seems like it, and it seems like it's continuing to tell us that Iran is not a huge concern anymore. The way it's been moving, the curve has been inverted, really since oil first spiked back in early March. They've been expecting prices to come down over time because this is really due to a very specific conflict, and we know exactly where the price increase is coming from. And so the oil is telling us that they don't expect this to continue. They don't expect higher prices to be, or they don't expect prices to be this high for long. And so it seems like it's been put on the back burner. Now, we saw earlier this week that oil did spike and the market sold off. So I don't want to say it doesn't matter anymore, but it certainly seems to have taken a backseat. It's not the front headline every day.
I mean, is there a world where the market just stops caring and it moves on to the next thing it wants to focus on? I always go back. Yeah, I mean, I always go back to the European debt crisis in Greece. Michel Crusoe Cabrera, outside the Pantheon or whatever they call those cool buildings, and the people shine the lasers and the cameras, and they're all out there. And Greece's debt to GDP is higher now than it was then, but CNBC isn't broadcasting live there anymore. Matters when it matters. So
yeah, I think in 3 months, if this is still going on and earnings growth is still strong, and I don't think the market's going to care.
Think about the companies on the S&P. Like a lot of these technology companies, I guess energy cost with data centers and things like that, but it's not like they're trucking, they're filling trucks with diesel fuel and moving goods around the country, right?
Right. No, I mean, I think there are some companies it affects, but I don't think that these prices are really hurting anyone too badly, right? I don't
look at the earnings though. I mean, we continue to see. What we look at Monday, Mike? It was 15.75 projected net profit margins in the S&P 500. I mean,
right.
Analysts are really good at this stuff, and they're not price. So maybe that's the thing. Maybe they're pricing the oil's coming down, and if they're wrong, this is going to hit earnings. That's the bear case for this, right?
Yeah, I mean, eventually, if it moves back up or it stays high for a long period of time, maybe eventually it hits into earnings. But at this point, the analysts don't think that that's going to be the case with how margins continue to grow.
We mentioned the size or shape of the curve, should we say? And there was a piece. This is from Refinitiv, and it's Wisdom Tree, sourced from Refinitiv and EIA, which is the government energy division there. And it's 8-week change, millions of barrels. And the point of this chart, audience can't see the chart, is at different points, presidents kind of peel off barrels from the strategic oil reserve, and they bring them to market to help try and bring oil prices down. So the Gulf War, 2000, Clinton release, 2011, Obama drawdown for Libya, Russia-Ukraine war, I think this was Biden, and then the most recent one. And the most recent one was actually, if this was a chart, you would say it's a series of lower lows. Like each of these is kind of lower. But what's sort of interesting about this is I think they're using swap agreements. And a swap agreement is where they deliver oil at like a higher price, and then they buy a swap, and there's no cost to it. They buy a swap to buy and refill it later. Did you see that? They're actually using these? I don't know if you saw that.
I did. Yeah, I think that's the case, which I don't believe that has been done before.
I wonder why no one's ever thought of doing this. Like, kind of makes sense.
Yeah.
You sell it higher, you buy it back cheaper, you actually, in theory, arbitrage a profit. So,
right.
According to Argus Media, there was a piece, Under these exchange agreements, the Department of Energy, DOE, lends crude oil from the SPR to private companies and refiners. These companies must then return the borrowed barrels plus a premium of additional crude, ensuring the SPR grows over time. Current administration has focused on utilizing oil swaps to backfill the SPR at no cost to taxpayers, capitalizing on the market backwardation, where current spot prices are higher than future delivery. Like, why hasn't nobody used this before?
I would imagine that the curve was similar, right? In these other instances where
Yeah, you would think so.
the near month price was higher. So I don't know.
I'd love to see these prior cases, if what they had to refill it at, what the price was. Was it higher or lower? I mean, here they're basically saying they're arbitraging. So, I mean, this is definitely a large release from the SPR, but you're basically like, here, I'm going to sell it. I'm going to buy it back later. It's like, here's my bike for $500 and I'll buy it back later at $400 and I get the same bike back. That's essentially what they're doing. It's kind of cool.
Yeah, it seems like a no-brainer.
Which is probably why the government hasn't done it before. All right, we got to talk about VIX a little bit. At worst, I mean, Friday was a nasty day. And we were on air, last week, Shane and I. It was a nasty day. It looked like it was going to get nasty again Tuesday. I mean, it did. Mm-hmm. Then you have some different geopolitical news coming out. Trump's like, yeah, we're good. 177 points. The S&P was up yesterday after being down intraday.
Yep.
So even with the nastiness on Friday and Tuesday, I think the highest the VIX spot got was around 22. You look at the chart here and you see in late March, it spiked to, and this is just last price. It's not the high price. I could have charted that too. But the last price was, the closing price. I don't know. It was above 30 back in March. And that makes sense because weren't we almost down 10% at one point? So
we were, yeah.
I was sort of surprised that the VIX didn't go higher. Like I felt like Tuesday or maybe even Friday, given the size of the one day decline. I don't know. I just thought it should have been higher. And the fact it wasn't almost told me that this was going to reverse.
Yeah, given the size of the one day decline, you would think it would be higher. At the same time, I think this sort of goes to, do we not care about oil? Does the market not care about oil anymore? And maybe, these types of news events, while the market was down so much, it's more of a, this, we don't see this affecting the market like we might have a couple months ago. And it's that type of news is just being absorbed better. But at the same time, then why is the market down so much? As I'm talking through this, it's hard to imagine that the market was down that much and the VIX was not up more. I'm with you.
Yeah. As we're talking here, I'll try and make a quick adjustment to this. And instead of last price, I'll do high price. Because now I'm trying to remember what the high price was that day. Let's see. High price. Give me 1 second. Yeah, so high price that day. No, I mean, I think according to this, 23.34. I mean, I would have thought at least gets to 25. This is surprising to me. The other thing, a tell I always look at, I always say, if this is a real problem in the economy and with companies, I always look at high yield. And it's this whole thing I always say to people, who's wrong? Equities or high yield? Meaning when things are really bad, equities sell off, high yield sells off, and we say spreads widen, meaning the yield to maturity goes up because the price of the bonds is going down. I don't know if you checked my high yield, didn't really move that much. In fact, it kind of moved coming into this as some of the rate expectations went higher. That's the other tell. I was like, who's wrong? Well, apparently right now it's equities.
Right. Yeah. High yield was fairly stable and equities were the ones selling off. So you're right. We always ask each other who's wrong. And it looks like in this case it was equities that were wrong, as high yield was more stable. You're right. High yield did sell off a little bit. What, end of the month, end of May?
Yeah.
So
But
happened
that
a
was
little
interest
earlier.
rates. I don't think
Yeah.
that was a concern on increased defaults. Not that I could see.
Right.
I guess the other one we should talk about is Apple. It's, the old Sesame Street thing, or maybe you're watching Sesame Street again. Who knows? Where it's which of these is not like the others. There's like three people playing basketball and one kid playing like tennis. Which of these three isn't like the others? But Apple's had, it hit an all-time high June 2nd, 315.20. Closed today almost equaling the low from the 9th. So that would have been, what was the 9th? Is that Monday? Tuesday. That was Tuesday, right? I think. Getting my days wrong.
Yep,
here.
that was Tuesday.
Okay, so that was the bad day. It's back down there, even though the market's had a pretty okay day today. So, Apple's run very far. They did their World Developers Conference. They talked about some stuff with Siri. It sounds like they want to improve it. And God, that thing really needs improvement. It is useless. But this is something to watch. Like, why is Apple going down? We say this too. Like, who's wrong?
It's interesting when Apple trades differently than the broader market. Sometimes it seems like Apple is the sort of safe haven of the mega tech companies.
Yeah.
And so you have, the rest of the tech leaders rallying and Apple selling off because it's more of a risk on trade. And Apple, being a cash giant, seems maybe a little bit more stable. So selling Apple and buying something like Nvidia or Google. And then there's other times it moves with the market and it rallies, like it had leading up to this sell-off. So the story seems to continue to change with Apple on a short-term basis.
This really is a multiple contraction on them, because as far as I can see, the earnings estimates are up and to the right, meaning they are the highest they've ever been. And, if I look at like a forward PE ratio, and I got to do something to kind of to fit it, Apple, their PE is higher than Nvidia's. So if I look here, and I just got to configure this, I got to do a blended forward PE. Give me a second. I'll do this. There we go. Yeah, 31 times forward earnings. And at their all-time high, it was 33,706. So the earnings estimates haven't dropped. The forward multiple has. And, when I look at this, and I'm just thinking, why is Apple at 31 and Nvidia is lower than that? I'll check Nvidia's too. And I don't know the answer. I'm just saying this is something to keep an eye on. Like, why? And quite frankly, Walmart and Costco have higher PE ratios, forward PE ratios than Nvidia, which is interesting in itself too. So Nvidia, Mike, is 20 times. So Apple at 31 or Nvidia at 20.
Yeah,
it's an anomaly.
It is. And it's not just Nvidia, right? Like, we had been looking at Micron and, what its forward PE was not too long ago. I think it's the 2-year plus outlook for some of the semis that has the valuation being a little bit lower, and the concern of, will this cycle continue, and will the rate of growth continue, 2+ years and beyond? And that's what's giving some of these semis these lower valuations, and people are coming in the Micron saying that's just way too cheap, and that's why you've seen it triple over the past few months.
I was on the phone with somebody and we were talking about Seagate, which is STX. That's the symbol for that one. And that's another one where, Seagate, it's not cheap. I don't know what a relative basis, Seagate is, but it's trading, 35 times forward PE. The point that a lot of people are making about some of the memory stocks is simply that their sales are not necessarily growing, but their margins are increasing. And I think that speaks to, and there are people who really watch this stuff, but it kind of speaks to the forward expectations and maybe why some of these aren't trading at a higher multiple, because the thought is at some point competition comes in, new entrants, whatever, or demand goes down, and then you do the same sales, but you go to your old margins or you drop margins. So yeah.
Right. With margins, with a business that has margins that high, it does allow room for new entrants, and that requires you to then immediately, lower your margins. And you're right, you go back to the same place you were.
I mean, maybe the other thing too is it's kind of like if you and I wanted to start an airline, or we wanted to start a Micron, that's kind of expensive. And we'd have to build the fabs, we'd have to build all the memory factories. And like if we wanted to produce chips like Taiwan Semiconductor does, and they just open a big plant here in Arizona, yes, new entrants can come in, but it's kind of hard. It's kind of, starting an airline's a little better for people to understand. Like you got to get the gates, you got to get the planes, you got to get certified, hire all these people. You need to raise capital. Like it's not easy. Where if you and I want to start a software company, like if we wanted to start Instagram before other people started Instagram, what did they start it with? Like a couple people, some servers, rent some server space, program some stuff in, and those are capital light, low intensive capital businesses. So, all right, give me a prediction on 30 days from now. Where is the price of SpaceX? This is like a hypothetical, and this is definitely going to be wrong. I think we'll both be wrong, but what do you think? What's the price in 30 days?
I'm going to go with $195.
Okay.
And I don't have a reason to tell you. It's just...
All right. Well, let me ask you so 195 a high side, but if you're wrong and it's a bear case, where is it trading at in 30 days? Like where's your bear price?
Like 100.
Yeah, I think I'm like 105, 110.
Yeah.
And I think on the high side, I think this could go to like 215. If I'm wrong. I don't know. I go back, I think we pulled, or Charlie Bolello on Twitter had pulled some data on this. Did I put it in there? Yeah. So he looked at, he didn't do 30 days. He did major IPOs in the last 15 years, 1 year returns, and max drawdowns from first close. So this is the return 1 year, and then the max drawdown from the first close. So Palantir drew down 5%. But then you go down, Meta was down 54% from its first closing price. First closing means, like, what did SpaceX close today at? That's what they're referring to. Coinbase down 55%, Uber down 65%. Let's see some of these. Lyft down 79%, Robinhood down 80%, Airbnb down 14%. The majority of these were down a year later. Palantir was up 153%. ARM Holdings, which had a decline of 25%, a drawdown, was up 125%. Spotify was down 3% a year later, drew down 28%. So history says you could have a drawdown at some point. I'm not saying that's what's going to happen, but that stuff happens. Like Twitter was down 8% a year later, it drew down 29% at one point. So
shocking that how many of these were negative after 1 year. I would not have guessed that it would have been so many. Only on this list, 5 were positive.
Yeah. In
1 year. Now this is the largest IPO ever. So, sure, it could follow this, similar trends, but just surprising.
Maple Bear, Instacart, Snowflake, ARM Holdings, Airbnb, and Palantir are the only ones on this list. It's not an all-inclusive list of all IPOs, but yeah, like the drawdowns don't surprise me.
No.
We just see this. I guess it comes, the two exceptions of, so SpaceX was a little different in that they went to 135. They just priced it. Usually the investment banks will look at demand and they'll come to an opening range and then they'll narrow it down. Because they left money on the table. Like if it was going to trade at 165, they could have gotten 165 for the shares.
Sure.
So Google was the other one that did a Dutch auction, and from memory, people had to put in the most they were willing to pay, and that was really different. So, the other thing is you wonder, did they price these too high? Did the investment banks bring these out too high and they were bound to fall? So time will tell on SpaceX, but yeah, this is kind of an interesting chart. These aren't great. Like, look at these drawdowns. They're really high. So maybe 100 implied volatility is the right vol for SpaceX.
I think so. I believe that even more now after looking at this.
You almost have to.
Yeah.
If this could happen. And if people are long-term holders of these things and they believe in the company, then maybe it works out. I think there's the index thing. That will be a good dynamic to watch. So, all right, Mike, any recommendations? You haven't been on in a couple weeks. Anything that you've caught up on?
Let's see. I think I mentioned Widow's Bay, and we're further along in that. I think there's only one episode left. Still really like it. If I was like at an 8 out of 10 before, I'm probably at a 7 out of 10. I still recommend it, but it's fallen off a little bit for me. And then Friends and Neighbors was great too. I think you said you were watching that.
Yeah, that's I almost, it's a buy, maybe a strong buy. Might be on my conviction list. Yeah.
Yeah. So we just finished that one, and I thought it was really, really good.
I randomly started watching a series, 6 episodes called Legends on Netflix. It just kept coming up, and I'm like, I guess they're trying to tell me something. It was, as drugs flood the streets of 90s Britain, a team of civil servants is thrust undercover to topple the gangs behind it, inspired by an untold true story. I thought it was pretty entertaining. I'll give it a buy recommendation. And it's 6 episodes, so it's not crazy. No idea if they'll do a season 2. I think they're fine if they do one season. It was because it was based on a true story. Like, I don't know, unless these people did something else.
Okay.
But I'll give it a buy recommendation. I thought it was good. And then obviously the Stanley Cup Finals and the NBA Finals. I'm Stanley Cup Finals. These games have been crazy. And Game 3, a lot of people are saying that's one of the best Stanley Cup Finals games ever. Pretty cool. And then you have the Knicks. Was it last night or the night before? The night before.
Yep.
We're recording this on a Friday. Like, they come back from 30-point deficit and score. So Knicks have not won a championship since 1973. It's been a little while. And by the time people listen to this, we may know the Stanley Cup champion and the NBA champion too. So
that's right.
And I mean, it's sort of a recommendation, but if you've been listening, I've been telling you, you need to watch these because it's really good hockey. I don't think the basketball's been that great, but the games have come down. They've been close at the end, however they got there. So they've had exciting finishes. But I don't think the basketball's been that great.
Yeah, I mean, it's been, I feel like, a little sloppy, but I think that's what's made it exciting at the end. Usually I sort of fall off on basketball and I'm just watching hockey at this point, but the basketball's been exciting. Like, if you just want to watch the last 5 minutes, it's thrilling.
You're probably watching reruns of the Last Dance documentary on the 1990 Chicago Bulls. Come on.
I've been through that a few times.
Yeah, I'm sure. I mean, look, you went to 6 finals. You won 6 times with Jordan and Pippen and the gang. So that's the thing. As a Bulls fan, you don't have any of those woulda, shoulda, couldas, like what might have happened, what could have happened, what should have happened. They just went to 6 and they won 6. So where the Knicks, 1994, could have done it. Coulda, woulda, shoulda. All right, Mike, that's it. I think we let's see next week everything that we got wrong and right, and we'll be back then. See you, everyone.